Thank you, everybody, for joining us today for our weekly update with Melissa Bova and John Longstreet. And I appreciate you taking the time to come out and listen to our webinar. We ask that you keep yourself muted and use the chat feature at the end, and Melissa and John will answer your questions once the presentation's done. And I am going to turn this over to you, Melissa.
Actually, I will. John, do you have any uplifting statements to offer before I go down the rabbit hole of the CARES Act?
Yeah, thank you for that cue up. I wasn't thinking uplifting, but let me just talk about a couple of things first before we get started. One, thank you all for being here. I want to remind you that this is kind of my PSA. This call is for restaurants, hotels, the travel and tourism industry, and our allied members, and anyone else that wants to get on from the industry. It's off the record. It's not for purposes of the press. We talk to the press right away every time they call us, but not on this call. So if you're with the press on the call, please disconnect now. Melissa's going to talk about the PPP and many other important things in a moment. And while we know that the PPP didn't turn out to be all things that the restaurant and hotel industry need, which Melissa's going to cover, I did want to let you know that as of the end of the day yesterday, there's been 36,000 loans, PPP loans approved in Pennsylvania, $9.9 billion in Pennsylvania, which makes us the sixth largest state in the nation as far as PPPs go. And interestingly enough, nationwide, 9% of all loans have gone to the food service industry. So as far as money going out, it's getting there now. Whether it's going to work exactly the way we want it to be, Melissa will talk about, but at least there's something happening with the program. Also, the big topic of discussion now, not surprisingly, is reopening. When can we reopen? How can we reopen? What sort of provisions will be placed on restaurants and hotels when they reopen? I'm going to touch on that briefly later, and I have to tell you there's no facts yet, but there's a lot of conversations that I'll bring you up to speed on everything that we know. But that's a little bit later in the presentation. I think Melissa's already got it on the agenda for me. So I want to let you know that's coming, because I know I know that's a big issue right now. So with that, I'll let Melissa get into the details of the nitty-gritty that we've been working on, and specifically she's been spearheading since we last spoke. Melissa?
Okay, thanks, John. And yeah, I think the snark might come back a little full force today as it pertains to the CARES Act. So please don't be offended, but the only way I can articulate how terrible this has kind of turned out is just to be honest about it. So Eric, can we go to the next slide, and I'll kind of delve into what we're hearing. So CARES Act, 2 weeks ago, we were fist pumping and so happy that Congress had passed monumental legislation that would save our industry. That lasted for about 3 days until we all started to try applying for the P3 and the EIDL. Last week, we started getting a number of questions, and this week, I think some of the answers that we got were not actually helpful to the information and what we need. So I'll kind of go through what I know we need changed in the CARES Act, and I'm not going to give any of you the answers that you're looking for and you need, because quite frankly, we need Congress to do something. And right now, we don't anticipate that happening, at least on the details in the immediate future. So let me go over what I know, and then we'll go from there. We could have, as early as this week, maybe next week, more funding for the P3 and the EIDL. P3 definitely, and now, of course, they're realizing that the EIDL needs more funding as well. The EIDL is borderline tapped out. It's not tapped out yet, because for those of you that have applied for the EIDL, you are realizing that it's taking a very long time to get those funds. We have since learned that what started out as the EIDL being a $10,000 grant within 2 days of applying and up to $2 million in relief funds for a low interest loan has now turned into $1,000 per employee up to 10 employees, and then a cap of $35,000 for applicants. So the EIDL has been, due to funding, almost slashed to a tenth of what it was originally supposed to achieve. That needs more funding. The P3, that will be out of funding within the week. And I'll speak to why that's such an issue and why I know a lot of you are caught in the crosshairs of the P3 right now. So the P3 will be out of funding, as they said, within a week. The administration and the Democrats are working on just legislation that would provide more funding. Great. But the problem is that the issues with the EIDL and especially the P3 are much greater than we just need more money. There are a lot, it's essentially on its face, not a solution for businesses right now. And that's because when they first passed the legislation 2 weeks ago, we were given parameters of what the legislative intent was behind the CARES Act. Then Treasury came out with completely different interpretations of what it can be used for, when it needs to be used since then. And that's really why we're stuck in the crosshairs, because many of you, rightfully so, recognize that this fund was going to run out of money. You applied for the loan because there won't be money if you waited to apply for the P3. But now, because of new parameters Treasury has put out, you're kind of stuck with a loan that's really not helpful due to the fact that you can't reopen your business. So let me go through some of the big items that we're asking to be fixed. And then I will also talk about a conversation that you all really need to have with your banks. As I said, we might get more funding for the P3 and EIDL as early as next week, but these fixes we do not anticipate happening possibly until the beginning of May. So we are in a bit of limbo as it pertains to that. Here are some of the things that we need. Currently, there's a 75-25% split on the use of the P3. That is fine if you were operational, because then that probably would be, for some of you, the split between your employee payroll and maybe some of your other expenses. The reality is that doesn't make sense for our industry in terms of what we need the funds for now. So we're asking for that 75% for payroll to be lowered to be 50%. So you can use 50% of the P3 for payroll, 50% for other expenses as it pertains to rent, utilities, and mortgage interest. We've since gotten clarification that you can only use the P3 for payroll, rent, mortgage interest, and utilities. You cannot use it for anything else. Further to that point, and this is probably one of the biggest problems, the intent was, and 2 weeks ago in my webinar, I reiterated this because it was what was in the guidance we received, was that you could pick your 8-week period to use the P3. So you could get funded, but you could request to your bank, I would like to wait until May 4th, which is the latest time that you could use it under the current CARES Act provisions. Treasury has declined to do that. Treasury has said that once you are approved for the loan, you have to use it within 10 days. I know some banks are telling you 5. Treasury guidance says 10 days. Upon the funds coming through, you need to draw on them. That is a huge issue. So not only are we trying to get that addressed for all of you, and Treasury could amend that. We do not need legislation for that. We're trying to get it moved back at least until May 4th. Treasury can give us that May 4th date, which is the last 8-week period up to June 30th. Legislatively, we believe that should be extended to as far as the end of the year, recognizing that for many of you, you won't be ramping up full operations, fingers crossed, July, fully operating. You might be able to do partial operations before that, but recognizing that for you to really utilize the P3 effectively without using it for 8 weeks and then putting your employees back on unemployment, which makes no sense whatsoever, you need the ability to have that extended. So we're working on that. Increase in funding is also, as I said, something that could happen as early as next week. We really are stuck in the crosshairs right now where it looks like there will not be enough funding currently. And even with an increase of funding, we don't know if there will be enough funding. So that's really an internal conversation you need to have is, do you wait as long as you can, maybe till that May period to apply? There might not be enough funding for you at that point. Or do you apply now and hope for Treasury to fix this, Congress to fix this to allow you to use the funds later? And that is a question I cannot give you the answer to. That is a conversation that you need to have internally, obviously, with your team, with your banks, with your accountants. Another item that we have on this is under, once again, the legislation said that any part of the P3 that is not used in that 75-25% split converts to a loan. The legislation said a 10-year loan. Treasury said that it has to be paid off in 2 years. We would like Treasury to once again go back to the legislative intent, which gives you 10 years to pay off the loan if you're not using it for that 75-25 split. Again, we think 75-25 doesn't work, but we do believe that if we have to do that, we need more than 2 years to pay that off. Those are some of kind of the major fixes we need, at least in terms of the P3. I will say that I think it will be fixed. I think there's a recognition within Congress that it's not working. PRLA did send a letter to our entire congressional delegation. It was included in our ledge update or in the daily update 2 days ago. And in addition, you all have been getting grassroots information from our national organizations, U.S. Travel, American Hotel and Lodging Association, and the National Restaurant Association to reach out to your individual congressional member on what needs to be fixed. Further to that, as I said, we do need to see fixes for the EIDL. We need to get it back to what was promised, which is that $10,000, $2 million cap. That is a funding issue, not an operational issue. They just keep on lowering it because of the number of people that are going for the EIDL. Quite frankly, probably going for the EIDL because the P3 doesn't work for our industry. In addition, we're also looking, as I said, for 501c6s to be able to tap into the P3 upon it being refunded as well. That also requires a legislative fix. So that's kind of what we need fixed in terms of the CARES Act and the P3 specifically. I'm going to get into unemployment in a minute. Beyond that, there is going to be, as I said, those fixes could be part of a larger, what we're calling COVID-4 package, which will include other provisions, hopefully tax relief provisions for the industry specifically, looking at business interruption insurance or a relief fund to provide more cash flow to a lot of you that need it. All of that would be part of what we believe would be another $2 trillion CARES package, COVID package, whatever you want to call it, that Congress could consider as early as May. It's getting harder though. I mean, we're seeing more partisan antics at the federal level, and I'll get into some of the things that we're seeing at the statewide level as well. And that's what we're running into is in a lot of that is the fact that Republicans want one thing, Democrats want another. There is a middle ground there, but it seems to be harder to find than it was with the initial CARES package. So we recognize this. I will say, in addition to the P3, if you have it, I really would love if you could have a conversation with your banks, because we're hearing a mixture of things. Our interpretation and the interpretation that was provided to us in CARES was that, let's say you get your money for P3. You use it for the 4 items that are delineated for it to be used for. But let's say you only use 50% for payroll and you use the other 50% for your rent, utilities, and mortgage interest. Our understanding was that the 25% that was supposed to be used for payroll but wasn't, that 25% would convert to a loan. We're starting to hear that some banks are saying, no, if you do not hit 75-25 on the nose, the entire amount converts to a loan, which is a monumental problem considering it needs to be paid back in 2 years. So please have those conversations with your banks. Please let me know if you're hearing that. That could be a treasury fix, but we're starting to hear a little bit more of that from the banks. We don't think that's right. We don't think that's correct. And quite frankly, it's not fair. But that is something we're starting to hear. And like I said, if you are getting that from your bank, if you don't hit the 75-25 on the nose, please let us know so we can work through some of that. So like I said, short term, more funding. May, hopefully, we address some of these inherent impossibilities in the P3 that just doesn't work specifically for our industry. There's a lot of businesses that it works for, but the hospitality industry, when we can't open, we can't operate, it really doesn't do what we need it to do. So that is all going to be part, as I said, of a future package. And please, if you have not sent an email, please do so. I have no pride of authorship on the letter PRLA sent, so please feel free to plagiarize it or resend it personally if you have a good relationship with your congressperson or your Senator Casey or Senator Toomey. We really just need to get the word out that our industry is unique and we need a unique set of help and circumstances to help us get through this. Okay, next slide. All right, let's go into what I know everybody's talking about this week. I feel like this is unemployment week. The Department of Labor and Industry is not handling the influx, the millions of people filing for unemployment well. I think we all know this. Unfortunately, some states have a better process relating to unemployment. Pennsylvania still uses, as you are all aware now, snail mail in terms of getting pins out to applicants, snail mail in terms of getting a confirmation from the business that the employee is indeed eligible for unemployment. All of that is slowing down the process. Now, in the third week of March, the legislature did pass additional funding to the Department of Labor and Industry to hire more help. They're in the process of doing that right now, but we are still looking at, for many employees, they're not getting their PINs in the time that they need to file for their first batch of unemployment compensation. We are in constant communication with the department. We are constant communication with legislators on the Hill. It really is just, they were not prepared for the onslaught of applications that were going to come through. They are working through it. I think we are looking at a 2-week turnaround. Hopefully that will be less. It should be down, to less than a week at the end of the day. But once your employees do receive their PIN, it will be backdated to when they filed for unemployment. It does not help in the interim. We know that. We know that there is rent to pay and bills to pay and groceries to buy. But it will be backdated, so they will get a catch-up payment once all of their processing goes through. The $600, that started this week. That is $600, as I said on the webinar last week, for anybody who is filing for at least $1 of unemployment. So that is $600 a week that will flow. We're being told it will flow separately from their regular payment, but will be deposited into their accounts or loaded onto their debit card if they choose to go that route. That started this week. That runs until the end of July. I will get to the question everybody has been asking once we get to that last bullet point, which everyone will probably Google when I do it. Self-employed. I don't know why the Department of Labor and Industry is having such a hard time setting up the application process for gig workers self-employed, but quite frankly, as of this week, they said that they hope to have it up within a week. They have not figured out how that application looks. It will be a separate application from regular unemployment that your employees have filed for. They said it will be up within a week, and it will, again, in that scenario, be backdated to when you first would have been eligible for unemployment. So again, there will be a catch-up payment. Doesn't solve the problems. I don't know why it's taking so long, but as of Sunday, they said that it should be up within a week for you to apply for unemployment if you are self-employed or one of the gig workers that have been wrapped into the CARES Act. UC 1921, this is now for all of you that have a P3 or all of you who have figured out a way to operate normally, this is the form that will become your Bible for employees that refuse to come back to work. This will be in the daily update today. We will contain a link. This is a form that needs to be filled out if you have offered work to your employees and they refuse to come back. So it has to be filled out within a week of you offering, and it goes to the department for them to then become ineligible for unemployment. We know that this is an issue that needs to be fixed. A lot of employees are possibly making more money on unemployment than they were making working. So this form is the form that has to be filled out to show the department that they have been offered work and they have declined it. the other half of this issue, which we are well aware. Employees are covered by their fear or concern over COVID. We still need to figure out the solution of an employee who says, I don't want to come back to work because I'm worried about COVID. They're protected. They're able to say that. They would still be eligible for unemployment, at least over the terms of the CARES Act scenario, if that is said. And we have not figured out that solution, but generally that UC 1921 is the form that you will be filling out. You can fill it out and then you just press send and it goes to the department. We are working with the department in terms of how quick that turnaround will be, but as of right now, that is the form that you will be using. That's my unemployment update. I'm sure I will get questions on that piece. PLCB, we do have a few fronts on that because I do know we got one question about spirits and I'm going to speak to that. Right now, in terms of the LCB, we are trying to get product for our members, especially those of our members that have that wine expanded permit. Preliminarily, and trust me, I don't believe it until I see it or I get the call or it's posted in a press release, we are being told that the LCB is working through a solution that would allow licensees to pick up wine, SLO wine and regularly listed wine at licensee service centers. They're working through that process now. They are working through how to make that kind of a no-touch drive-up scenario. So as soon as I get I have details, but I can't share them until I confirm them because I have gotten more details from the LCB that have changed within a day. And I don't want to provide information that might be inaccurate when it's all said and done. But they are working through that process right now, and we hope to have information to share on how that would work to licensees. The other part of this, many licensees would like to sell spirits. We would like licensees to sell spirits, but it doesn't do us all that much good if we couldn't get the first step of you actually being able to get product from the state stores. You could sell Pennsylvania distilled spirits, you could sell Pennsylvania wines, but Pennsylvania distilleries and Pennsylvania wineries are selling those products. So for us to fight to the death for you to sell spirits did no good unless we could actually get product for you. An amendment is being filed to a liquor bill today. I just reviewed it and got back by Representative Kurt Mosser, who's actually a restaurateur, that would allow licensees to obtain a spirits permit just over the course of the pandemic for $250 to sell spirits to go. He is offering it as an amendment to a liquor bill that could move as early as next week if the House returns to session. So the LCB will not allow us to sell spirits just because it's the right thing to do, even though other states have allowed it. They have declined. Representative Mosser thinks that anything that helps licensees get capital or just get revenue is helpful. So he is filing that amendment, and it might be considered as early as when the House returns. But we do need legislation for that. All of you that know me well have heard me gripe about how quickly and or slowly our legislature moves, but that is something that he is very passionate about, someone who's in the industry that he is planning to offer for us. So we will have more information as that works through. Legislative session. The Senate is in session as I speak. The House was in session yesterday. It's a bit of a war, and for some of you that were on early, I was talking a little bit to this. There is legislation that the Senate will pass today, Senate Bill 613, and we'll send it to the governor that would rescind the governor's essential, non-essential business orders and effectively say, all businesses can open as long as they operate with CDC guidelines as it pertains to social distancing, masks, all the guidelines that the CDC has out there. The PA House has passed it. It's in the PA Senate right now. They are both Republican controlled. We expect that the Senate will pass it. We expect it will go to the governor, where we expect he will veto it. So I don't want people to get too excited about this because I don't see any Democrats switching sides to help override a veto from the governor. And I don't think the governor is in a position right now to let businesses reopen, which is incredibly frustrating, but also recognizes the fact that if we do reopen everything all at once, are we going to be back here in a few months, kind of going through the same hell that we've been going through for the last month. So that legislation will go to the governor possibly today. We do not expect him to sign it, but my daily update will contain all of that information. On a positive note, Senate Bill 841 is possibly already signed in the Senate, but will be on the governor's desk today for him to sign, and that's that property tax delay I discussed last week. That will delay, like I said, it's enabling, so your county and local municipalities have to pass legislation to authorize it, but it would allow you till August 31st to pay your property taxes and get that discount, and it would allow you till the end of the year, December 31st, to pay your property taxes without any fees or penalties assigned to it. That, like I said, we passed unanimously in the Senate, passed unanimously in the House. We expect the governor to sign it. And once that he does, your local governments can pass that authorizing legislation at the county and local level. Further to our priorities, I went through a slew of priorities last week with all of you in terms of what PRLA is working on. As of yesterday, our last committee, our Lodging and Tourism Committee, approved the list. So PRLA will be drafting a letter that will go to the full legislature and the administration regarding what we believe statewide priority should be. That will be drafted. I'm fingers crossed I will get it done today. If not today, it will be done first thing tomorrow morning. And some of those priorities are already kind of moving forward. As I said, one of them is that property tax delay, which we have taken care of. Another is a bill being drafted today relating to rent, not only preventing evictions for 90 days, but also ensuring that late fees and defaults against your lease will not be able to be held against you for the 90 days you're safe from eviction. So Senator Killian is the prime sponsor of that. And then that will be filed today, and hopefully we'll get moving as the legislature returns. So that list of priorities in a letter will be either in today's update, but more likely tomorrow's update. So that's kind of what we're working on. Like I said, the Senate's in today. Their session's weird. They have scheduled session and then they cancel and then they reschedule. I mentioned this last week. If you want to be entertained, the Senate is doing their session via Zoom. And it's just kind of funny to watch senators that clearly have not really done a lot of video conferencing participate in that. Some really interesting backgrounds are chosen. So if you want to spend 5 minutes and get a good laugh, you can stream that and just see how certain senators are handling their Zoom conferencing abilities during the pandemic. And with that, I will let John speak to, and he mentioned this at the beginning, but really what he's working on in terms of our future when all of this is over or close to over.
Thanks, Melissa. Great update as usual. I'd like to go out of order, Eric, and go to the next slide and come back to what happens when orders are lifted, because that's a longer conversation and probably where we should end for the day besides questions. The Hospitality Assistance Response Pennsylvania HARP continues to collect funds. If you read your daily update, which I know most of you do, you saw that Yingling became a major sponsor yesterday as well. So we're going to open applications for that the first part of next week, but we're not going to be, and we're going to make it clear, we're not going to disperse funds right away, because the development committee, the good work they're doing, they need to do more in order to meet the needs that I know we're going to get through that. So the application, a lot of people ask, when will the application be out? We anticipate having it out the first part of the week, with a caveat that so we can get through all the applications, be ready to disperse the funds when we finish the initial fundraising effort. The second one is business resources, and just to point out that those are available, and employee resources also, and we carry these every day. Carryout PA, which is our site that helps restaurants who are offering carryout or delivery or curbside pickup to get recognized. We shifted to a new site over the weekend, and you'll see, if you haven't checked into it recently, it's much more nimble, slicker, easier to access the restaurants you want to get to, and it's easier for restaurants to upload their information. We have about 600 restaurants on it now. We're beginning to get a big push from the media, who we've been working with in both Philadelphia and Pittsburgh for outreach on Carryout PA, and our friend Carrie Lepore at the at the tourism office for the state is doing a big push for us to get people to find the site, both consumers and restaurants. We have reports from most of our restaurant friends that their carryout sales are significantly increasing, still not enough to sustain a business, but they're 2 to 3 times what they were prior to this. And it's a need that's absolutely needed from the community. So we're glad we're able to do that through Carryout PA. The question about reopening, to go back to that, what happens when the order is lifted? There's, I can mostly tell you the efforts that are taking place and then give you some thoughts on it, but there are no answers yet. And you've seen a lot of, this is the week of, Melissa said this is the week of unemployment. It's also the week of reopening. And it really started when the president declared that only he had the power to reopen the states, which caused the Northeast states, which included all of the Northeast states and Pennsylvania, with the exception of Massachusetts, to band together the 6 states and say, essentially, we're creating the reopening plan. Very quickly then, the president sort of backed off and said, we're going to work with the governors to help them get reopened, but they're going to be the ones reopening. And then last night, the president announced his task force, his economic recovery task force, which is about 200 folks, including the National Restaurant Association, most of the major restaurant chains, many independent restaurants that can represent the small guys, and all of the major hotel brands, the CEOs from all the major hotel brands, and many other travel and tourism sort of entities. Because the concept would be that they would create guidelines like the CDC put out during the shutdown as how states should handle the shutdown the same way they should handle the reopening. So for the most part, the governors followed the national guidelines that were handed down in the way that they closed the states. For the most part, Governor Wolf did too, with the exception of the construction industry, which came up as one of the questions I noticed. We're only one of 2 states in the nation that shut down road construction and other construction industries, which I can't explain it, and it's not really our bailiwick. But in getting reopening, what's happening now is the governors, as you saw at the press conference that Governor Cuomo convened earlier in the week, are getting together to talk about standards, not that would necessarily be rolled out at the same time, because each locale may be different. New York City is certainly different than Clearfield County, Pennsylvania. So, but to come up with standards that could be implemented at the right time when things are reopened. The concept that there will be a reopening order, the order will be lifted, at least for our industry, is unlikely. There's likely going to be a gradual build back up. We turned the switch off a month ago, but it's not going to get turned back on for a number of reasons. The biggest one of which, as Melissa mentioned, is that everyone's scared to death that we're just going to reactivate this. We got a preliminary order form yesterday for antibody testing and swab tests that could be distributed to restaurants yesterday. But those won't be out for at least a month. And that's going to be a real big part of safety, I think, moving forward. So what's happening is just like the 6 state governors got together, the 7 state restaurant and hotel associations in the Northeast got together, and we're establishing standards which hopefully we'll be able to work with our governors on to make sure that as orders are issued, reopening orders, and they're stair-stepped back up to full capacity, that there is some operational practicality included in there because they worked with restaurant and hotel people that understand the intricacies of operating. We've reached out to Governor Wolf's chief of staff. He's responded, and we haven't had the 2-way dialogue yet, but we've been back and forth on text about the necessity to do this. We're hoping that the administration will see the importance of that. Certainly the federal administration has seen the importance of doing it. Ohio may be the first state association, this is the restaurant side of Ohio, they're split, that actually created guidelines to submit to their Department of Health and how that they thought it should be handled in reopening. It's a template. We also have some guidance from another state in the Northeast that hired a company to come in. The governor actually hired the company to come in and to study all of the other countries that have gone through reopening and what's the best way to do it. We believe there's some issues in how they intend to reopen restaurants there if they follow those guidelines. We're trying to weigh in on all of that. So I'm giving you the long story. The short story is that the importance is to get a seat at the table with some restaurant and hotel operators who understand how they operate, both big restaurants, small restaurants, and tiny restaurants. And so that we can have them understand what it's like to walk into a restaurant when you say you're going to operate at 33% capacity for a month, what that really means to the different size restaurants. We've had many restaurant operators say they wouldn't open at 33%. So those are the sort of things that we're trying to stay ahead of right now, working with our restaurant members on a task force to ensure that we can get some real operational perspective to the administration as they make these decisions. Whether they will pay attention to that or not, whether they'll certainly balance it with health concerns, we don't know, but that's what we're working on right now. So I think that's probably about all I can tell you on that. I've told you what's happening at the national level, what's happening with the coalition of the 6 governors and our coalition. I should also mention the National Restaurant Association has employed some very heavyweight people to look at the best way to reopen restaurants in a safe way and yet in a way that can get them back in business. So we have a plethora of resources, and now we're trying to distill it all and make sure it gets to the elected officials so that as we have a reopening plan, it works and it makes sense. So with that, I'll turn it back to you, Melissa, if you want to address any questions or bounce any to me, that's fine too.
Sure. I will say this. There are some of you that are on this call every single week, and I'm honored. So thank you for listening to me rant and rail for an hour every Wednesday. So if we get the loan in the next 2 weeks, would everything you're working toward be retroactive? Not sure. And I can only say not sure because if you're required to start spending the money within 10 days, you might be 5, 6, 7 days into tapping into the P3. So in that scenario, we'd be looking for an extension of maybe 16 weeks of funding. So we fund it for 16 weeks to kind of extend you being able to use it. That's how I would envision that working out. I am not sure how it would work retroactively for all of you because you'd be spending the money, so it would already be gone for it to be retroactive. So we could go retroactive in terms of the 50-50, but as I said, you need to operate under the parameters we have right now, which is 75-25. Of course, if we want the Treasury to change things, they need to do that within the next day or two to actually make this helpful, at least on some of those fronts. If they don't, we're going the legislative route, and then we'd probably be looking for an extension of the funding. What is the number of the bill again? I think that is in reference to Senate Bill 613, which is the opening of businesses for the CDC guidelines. As I said, that will be considered in the Senate today. There we go. And there is other legislation that the House has passed, the Senate might also consider today. I haven't poured through their calendar yet. That would almost create an advisory task force and force the governor to basically include the House and the Senate as part of it, and of course the Department of Health, all the entities he's been using, but involve the legislature in some of the unilateral decisions he's been making as part of the state of emergency. So that's also legislation that's being considered. As John already spoke to for construction, the governor could allow that. I mean, he could allow that right now. It was kind of there's a lot of odd decisions. I mean, closing the liquor stores, to me personally, I took offense to. That was an odd decision. Shutting down construction was an odd decision. He could change it on his own. I don't know. There's a lot of pressure on the construction front. So we might, if it gets to him on its own and not part of a bunch of other things that he hates, he might let it go. He might not sign it. He might let it go. But we don't know the answer to that yet. Does PRLA have any guidance on getting or accepting the P3 the way it is? As I assume we all signed up or got in queue seems to be at risk. All we can do, right, and you can talk to your banks if you decide that you want to decline the loan. That is a lot of this, and I know it's frustrating. And I mentioned this last week, the banks have a lot of leeway in this. I mean, obviously now we're stuck in this, have to use it within 10 days or 5 days, as your bank might say. But you really do need to talk to your banks. If you've applied and you decide that maybe this isn't the way to go, that's a conversation that you should have to maybe roll it back. But with that being said, there might not be funds in the future if you decide you want to apply again in the future. I wish we had the answer, but we don't. It really is, like I said, an internal discussion you need to have, a discussion you need to have with your bank. And hopefully the Treasury within the next few days will recognize the inherent problems with this, especially for our industry, and make some changes. Any legislation being considered for real estate tax relief for hotel industry, or a 1-year reassessment based on lower true property value? Has local issue, but maybe statewide. I was just going to say that is more of a local issue. It could be a statewide opportunity. There are some, Philadelphia, obviously, it's hard to state. Everyone knows I've been trying to statewide mandate Philadelphia not to do some of the things that they do. And I know reassessment is a huge problem in Philadelphia because they are doing that reassessment every year. We can talk about it. I can float it at the state. That really is probably going to be a city council mayor discussion at the end of the day. I think it's valid. I think it makes sense. I will say that we've had a number of conversations in Philadelphia, especially, and a lot of it's just, we need the feds to bail us out. We're already bleeding money, and therefore we're not going to give you anything until we know the feds are going to give us money. And that's kind of the gray area that we're operating in. So hopefully we will see some traction with that, as I said, with the next package that will include some of that bailout for the cities that are spending a lot of money right now. Any efforts to provide relief on sales and use tax deferments, forgiveness, discounts? Well, let me tell you where we are. And I actually got an email about this, and I don't know if Denise is on the webinar, but I will speak to this. We pushed hard to defer sales tax, any tax remittance at the state level back in March, because February was when you last had a decent revenue stream, and we wanted you to be able to keep it. So we pushed hard. The state of mindset of, it's our money, and I've said this tongue-in-cheek before, they believe when you collect the money, it goes into a happy, secretive little account that is just theirs by right. They basically determined that it is still theirs by right. Now, what we were able to achieve is a deferment of that prepay. So for some of you larger tax remitters, you have to prepay basically for the month ahead. The prepays have been eliminated. So on the 20th of every month, you are just remitting the actual sales, occupancy, use tax that you collected from the month before, recognizing that for that prepay, which is typically $5,000, you're probably not even remitting $5,000. So we got rid of the prepay. You are still required to remit what you collected on the 20th of each month. Definitely. And this is where we're stuck on this, honestly, is the state is now looking at least a $4 billion deficit. As I mentioned, cities and municipalities are looking at deficits. So while they want to be helpful and defer some larger packages, they also want to try and keep revenue coming in as well. And now that the February ship has sailed for you to keep your money, we're looking at, is it worth us dying on the sword for you not to remit the little pittance of money that you've collected since you've been shut down? It's an ask of ours, but we don't know if it's really going to be worth it to all of you at the end of the day, as much as bigger payments, like some of your licensing applications, your property taxes, rent payments at the end of the day. Let's see, you mentioned a 250 PLCB license to distribute spirits. Is there any wording we can utilize to reach out to our legislators in support of this effort? I mean, that's pretty much it. It would be a permit that would allow licensees to sell spirits over the course of the state of emergency. So it would only be during this pandemic. It would be very short term. you could start reaching out now, but we don't know when the House is coming back into session yet. And we also don't know if the bill is going to be scheduled. So I would pay attention to our daily updates to see when we see traction on that, because we really want to hit hard if this is something we think we have an opportunity to. We also run into the problem that even selling spirits during a state of emergency steps on some of our LCB toes and some of our workers that work in the state stores where they're the only ones that can sell spirits. Because you have to keep in mind, if our restaurants can sell spirits, grocery stores have restaurant licenses. So that's where we get into some of the political waters of trying to get it across the finish line. So I would wait on outreach until we get a better feel for if we have a chance on it. I'd rather tailor our outreach specifically to the legislative priorities we're going to be listing in our letter today, in addition to just getting product for licensees. Like I said, if I can't get the state stores open for our members to get product, it doesn't matter what type of permit you get, because you can't get the product in the first place.
Yeah. There is one up a little further that says, what kind of, if any, constraints do you foresee for self-employment seeking unemployment compensation? Do you see that one?
We don't know. Quite honestly, we are not sure what the requirements are going to be from the department in terms of that. I think we had a webinar last week, and there were questions of what tax forms would you need to have? Would you need to have a W-2? Would you need to have some other tax forms to be considered eligible? And that might be why we're still in limbo. The department has not delineated what would be required for that. So I would, if you, wading through the unemployment compensation website gives me a headache, and I'm pretty good at it. But I will say, if you get to their coronavirus page, they're pretty good at putting the timely updates as it pertains to the CARES Act there. Detailed questions takes more time, but I would definitely pay attention to their website, because when they open up that portal, that's going to have all the information that you need. Under P3, can you give yourself and employees coming to work a raise? You can, but because of the constraints, and like I said, it would depend on how your bank is interpreting it, depending on the constraints of needing to bring back your full-time equivalent to meet that standard, and of course meeting the payroll standard, you might be using more than 75% for payroll, which would be a conversation with your bank if that's allowed or not, or do you want to go higher, because then you lose that extra 25% to pay other bills? That would probably be a conversation you need to have with your bank. Because now I will reiterate this again. The banks are determining your forgiveness of the loan. We are getting guidance from the Treasury, but the banks are the ones that are going to look at it and look at the information you give back to them and determine if it's forgiven. So that is a conversation you might want to have with your bank to determine if that would be acceptable. I would think so, but like I said, we do have some banks that are saying 75-25, you don't hit it, you're SOL. So that is a banking conversation I would urge you to have. If you are okay with the P3 becoming a loan, can you use the proceeds on any expense, or are there still restrictions? There are still restrictions. You can only use, and this just got clarified since our last webinar, you can only use the P3 on payroll, rent, mortgage interest, and utilities. And then there's some debt stuff in there. You cannot use it for anything else. So you cannot use it to buy product to sell or buy food or any of that. The P3 is restricted in terms of what it can be used for. The EIDL is not. The EIDL you can use as you wish, but the P3 is specific to those items. I got approved for P3, but if funds come through and I have to spend within 10 days, how will I be able to compare that to EIDL, given the EIDL is so delayed and the constraints keep changing? My understanding is that we can't use both. Again, you are allowed to wrap the EIDL into the P3. I am not sure that Treasury has figured out how that worked yet. So you can utilize both to a certain extent, just not at the same time or for the same things. And I don't have the answer to that yet because quite honestly, I'm not sure Treasury has figured out the answer to that. So I would probably, once again, talk to your bank about how the P3 and the EIDL would work, since the P3 is the one that you're going to get a swifter answer on, and that those funds are coming through first. I have not seen further guidance on how that, as I said, the wrapping together of the two will look yet. Hopefully, and there might be something that I haven't gotten to yet, but I have not seen how those two kind of interact in terms of their use. Okay. Oh, thanks, Sue.
Oh, you got a really nice, we got a compliment at the beginning too, that these are been extremely helpful. So you guys missed that one before you got on. Well, it seems like questions are not coming in, but we do still have the feature on our website where you can submit questions for us to review. You know, if you have more questions after this, this is recorded. We will be putting this out on our website, and I will be taking the questions and putting the answers to them for staff to use on FAQs. Thank you again to Melissa and John for getting on the call and presenting this information, and thank you to you all for joining us. And I hope everybody has a nice rest of the week. Thank you.
Thanks, everyone.